Alright, just let me cover the disclaimer first. Just take note that this presentation is purely for educational purposes. It does not take into account specific investment objectives, financial situation, or particular needs of any particular person. Okay, so moving forward, alright, I'd just like to do a bit of a run through, which I always do in terms of how I analyze the charts and things like that. I think for those of you who attended my webinars a couple of times, you know I always stick to the same method, okay, which is very important, especially if you're a trader. You need, of course, in the beginning, you need to find a method that suits you, suits your trading personality, and then you sort of like need to practice it, you know, on a live account, on a demo account, until it almost becomes second nature to you. Okay, when I say second nature means that your strategy, you need to be so good at it that it sort of operates subconsciously, which means that if you look at the chart and it doesn't take long for you to see a setup and know what you need to do. If you're still, you know, looking at the chart and trying to figure out, you know, whether where you should enter, where you should exit, and what's the strategy, you know, or you're a bit confused still in terms of, oh, my MACD is showing this, but my stochastic is showing this, then your strategy is not, alright, it's not subconscious yet. Okay, it means you're not confident enough, or you don't know it well enough. Okay, too many of times I see traders or clients moving in circle, in the sense that year after year they keep changing strategy and they're always back to square one. And it's very important for you to be confident and practice the strategy as much as you can, because if you keep changing your strategies, then your psychology can never be developed. Okay, because one minute you're a scalper, the next moment you are a long-term trader. I mean, I'm not saying that you can't be all kinds of traders in terms of long-term, short-term. If you are good enough, if you are there, you know, so to speak, then maybe you can incorporate different kind of strategies into your trading. But if you're still new, you're still a struggling trader, I would suggest sticking to one strategy that you believe in. Of course, the strategy need to be proven, tested, you know, and the most important must suit your personality. Okay, so if you're a struggling trader, if you're new to trading, find something that suits you, stick to it, make it into a subconscious mode, and then that's where your psychology will take off, and then you can see results. Okay, so it's a very, very important thing. Now, my strategy that I'm using for years is always based on price action, and in terms of the steps on how you should analyze the market, right? I always cover this every single week. Is that I always look at, you know, what the market is trying to do, whether it's in the correction mode or consolidation mode, or whether it's uptrending or downtrending. Okay. Um, Second question I ask myself is always, what is the reference chart? Meaning that which chart am I planning to trade on? Whether it's a daily, 4 hour, or 1 hour, or 15 minutes, whatever. Okay. But the reason why it's good to tell yourself what's the reference chart is so that you can set your expectations before you even enter the trade. Okay, it's very important to set your expectations. And when it comes to trading, right, you need to, as much as possible, make your habits as consistent, meaning that from the time you analyze the charts till you execute it, till you review your trade, all right, make everything as consistent as possible so that there's a feedback loop. And when I say feedback loop, meaning that, you know, let's say you don't make money in the trade, you can roughly tell whether is it because it's something you can't control. For example, a news came out from nowhere, or maybe just part of the strategy, just that the trade didn't happen for you. Or is it more because that your analysis part, you were too anxious to place the trade, therefore you didn't analyze properly. Or could it be because of your execution? You were distracted and you didn't put a stop loss, or you executed at a level whereby it's not, the probability is not high anymore. So you need to have a feedback loop. So that's important. And so again, back to my planning. So first question, which phase the market is in? Second question, what is the reference chart? Because if I'm planning a trade based on a daily chart, then my expectations is I might be able to hold the trade for a couple of days before the trade actually moves. and my stop loss might be slightly more, or not say slightly, my stop loss more often than not will be more than 30 pips. Okay, so this is what I call expectation as compared to if your reference chart is the 1 hour, for example. Then you're looking more for intraday kind of trade, maybe stop loss 20 pips or so, 10, 20 pips or so. Right, so it depends on what's your reference chart. The third question you ask yourself is whether the market is in a volatile or non-volatile phase. Okay, because if it's a volatile phase, later I'll show you some live examples. If it's a volatile phase, for example, if, let me get my drawing tool here. If the market just keeps going up like that, okay, this is what I call non-volatile because it's almost one direction as compared to a market that's doing this, okay? This one is more volatile. Now, how do I trade based on these two different scenarios? In the non-volatile kind of phase, right? When I say phase, it's P-H-A-S-E, yeah? If my reference chart is a daily chart and I see the market doing such a move, number one, it's very bullish, isn't it? Number two is non-volatile. And non-volatile means if I want to enter the trade, right, I'm a bit more aggressive. What I'll do is that I'll go to shorter term chart and I will try to enter based on the breakout of a new high. That means the market is doing something like this on the shorter term charts. I'm happy to put an order here. When the market goes higher, it takes my stop buy order, and then hopefully it goes further up. Okay, because in the non-volatile market, sometimes the pullback doesn't come. Okay, because in price action, what I like to do normally is I trade the pullbacks, right? But in the non-volatile market, where the market keeps trending higher and higher or lower and lower, sometimes a pullback doesn't come. So what I'll do is that I'll go to short-term charts and try to take a break of a new high. Okay, can anyone tell me that which FX pair always does such a thing in terms of non-volatile trending markets? Which FX pair? So when it moves, it really moves. It doesn't have much pullback. Any one of you? Yep. I mean, most of the time, right? The yen pairs. Okay, the yen pairs are the one. Yeah, exactly. MacBay. So, yep. Oh, hi, John. Long time no see. Thanks for coming by. Yeah, mostly the yen, the pound pairs. I would say especially the yen pairs. All right, I'm thinking a couple of weeks, or was it last month, the dollar yen, the pound yen, the way they move is simply just boom, up like that. Let me just show you a live chart example. Let's go to dollar yen. Go back to my... Okay, so if you look at this whole move here, okay, that's a very ugly circle, but you get my drift. The whole move just like that. And so in fact here as well, this whole move here, because this is a daily chart, right? So actually in between. So whenever I see the market doing something, look at this. This was the French election first round, right? When Macron and Le Pen was given the shortlist, and it gapped up and gapped up, just kept moving. In fact, I was looking for a gap cover. It didn't come to my level. Okay, I was looking for a gap cover. You know, you guys know gap cover trades, right? So whenever the market gaps up, more often than not, the market try to cover the gap and then continue the direction of the gap. This case didn't happen. So I was looking for a gap cover, didn't happen, and then I saw this non-volatile kind of movement. So all I was looking for is an upward breakout, new highs on the short-term time frame. So if I zoom in to the 1 hour chart, for example, okay, so you can see okay, so you see the 1 hour chart, right? This was where this whole thing, right, was a daily uptrend, non-volatile uptrend. But that's where you can see a lot of minor pullbacks or break of new highs. So when I say break of new highs means, you see all these highs? This is a break of new high. This one was a bit tricky because if your stop buy was taken here, right, it actually came down. If your stop loss your stop loss was below the previous swing low, you survive this drop and then continue higher. But if your stop loss, for example, was around here, let's say you take the 786 Fibonacci level of this small swing, if it was here, it might got taken up. Okay, but anywhere after this, you see this level here. Let me just zoom in. Let me just zoom in a bit more. Sorry. Okay, I'm trying to cover a bit more how I analyze the chart and how I look for trades. I think that's more important than just giving you what's my analysis. Because if you know how to plan it yourself, right? Seriously, what is the trade ideas I give you is not important anymore because things can happen in a second. But if you know how to plan it yourself, it's brilliant. Let me just go back. Yep. So if you look at this level here, so like I said, this was a new high, so you could have been triggered on the stop buy here. Okay, and this was a bit tricky. The other level that you could have gotten in was if you place a stop buy here, okay, and then got triggered and it went up. Okay, another level is, if you can see here and here. Yep. In fact, you can even take a short-term pullback and long from here. Or you can have taken a break of new high. Maybe you enter here, stop loss below the previous swing and continue above. Okay. Of course, there was a bigger corrective move here. But you get my drift, right? So whenever you see, again, trading is all about probability. Okay, you need to have a mindset of probability. Okay, that's why good poker players, right, like the professional poker players, most probably they can be good traders. Okay, because the way they approach the game, it's all about probabilities. And if you go to the daily chart, so you see, so what I'm talking about is basically this whole swing here. Yep, this whole swing here. And I broke it down in the 1 hour chart. Okay, so if you see a non-volatile trend like that, okay, then you might want to look for a short-term chart and try to find entries. Of course, you got to be smart enough or alert enough to not to look for entries, buy entries somewhere here, because look at the amount of resistance around here. Okay, so what I'm saying is that anywhere in between here is okay, anywhere in between here is okay, but if it's at sitting right smack in the daily resistance, just be a bit more careful. Okay, so I just wanted to touch a bit more theory before I continue. And that's why, again, back to my point, you got to practice your strategy till it becomes subconscious. Okay, it's very important to keep doing that and keep it as consistent as possible. If you look at some athletes, right, especially like archery or whatever, golf, football, most of them, whenever they hit the peak form or when they hit the peak or peak performance, okay, it's always when they perform out of the subconscious mode, whereby something just takes over them and they're not thinking, they're just going the flow because it's already inside them. So same thing for trading. Okay, so moving on to the proper. Hi Gary, you said how you make the color area. You mean the oh, you mean the moving average, is it? Are you talking about the moving average? Yeah. Yeah, you got to go to where did I do it? Hold on, yeah. You got to go to add color zone. So basically right click on the chart. So Gary's asking how to add the shaded area of my moving average. You right click on the chart, go to settings price and add color zone. See that? Yep. Got it, Gary? Okay. Okay, so let me just duplicate my chart again. It's easier like that. Okay, so let's go on to the market proper now. Okay, so let's start with S&P 500. Yeah. Any of you frustrated that how the S&P made a new high again? It's like I'm sitting here talking about S&P and I'm saying the same thing about the S&P for the past few months. And the thing that I'm saying is that, again, fundamentals doesn't make sense. Why is the indices making new highs? But we should just follow price action. Okay, it's very interesting because there was this 1% drop, I think, a couple of weeks, or was it just last week? Yeah, this was the 17th May, 2 weeks ago. Okay, so this big 1% drop. And a lot of the traders I speak to, they are asking themselves, wow, finally, sorry, is this finally the job that they're looking for? Is this finally the big correction that they're looking for? Okay, and only for the market to push it higher and higher, and it broke 2400. All right, why am I not surprised? Okay, I mean, a lot of the S&P and a lot of these indices are still being supported by a lot of cheap liquidity that has been pumped to the system for years and years. I think almost 5, 6, 7 years. And all these big boys, they call it, are still supporting it. So unless they stop doing that, then there will be a big correction. When would that happen? I have no idea. Okay, I have no idea. But like I say, I mean, as traders, right, we should learn more to follow the charts rather than try to predict the charts. Okay, and the more you just follow the charts, the more you find pleasure in trading because there's no resistance. Every time our intellectual mind will use some kind of fundamental reason to say that, oh, it's too high or too low. But that's not the case most of the time, isn't it? So for the S&P, if you look, I mean, it broke 2400. Right now, 2400 was resistance and now it's becoming support. Okay, and if you look, hold on, I don't know why there's a cross here. Okay, no mind, ignore that. But anyway, so I was saying, if you look at this 4-hour chart, right, 2400 broken cleanly, used to be resistance, now support. Okay, right now the market has made a slight double top. It's still bullish. If you look at the daily chart, it's still bullish. Okay, if you look at the shorter term charts, it's more sideways. So again, let's follow the top process in terms of planning trade. First question, is it trending or is it in consolidation mode? Second question, what's your reference chart? So if you look at the different charts I have here, daily, 4-hour, 1 hour, daily chart, definitely on the uptrend. Still bullish, okay? I know there's a divergence, there's a bearish divergence here, but it might take some time to materialize because it's a daily chart. Okay, so daily chart is still bullish. 4-hour chart is still bullish, approaching some kind of support. 1-hour chart is slightly different story. 1-hour chart is actually, to me, consolidating. Okay, let me just delete this line here. So if it's consolidating, that's where you need to whip up your support and resistance trend lines and things like that. All right. So if we look at the 1-hour chart, so the next question you ask yourself, what is your reference chart? What do you want to trade off from? So if you tell me that 1 hour is your reference chart, means maybe you execute on the 5-minute or 15-minute chart. But if you say 1 hour is your reference chart, then I would say that you're actually trading in a consolidating market. Okay, there's 2 levels of support. One is here, which we're potentially heading to. The other one is around here, which we might be potentially heading to. Okay, and if you're trading on a 4-hour chart and you say it's an uptrend, then you need to ask yourself, okay, it's an uptrend. Which support level are you keen to take the buy position from for the trend to continue to go up? All right, same thing for a daily chart. All right, same thing for a daily chart. So if you say a daily chart is uptrend, I want to buy, okay, which level are you willing to buy it from? Maybe near the 2406, 2407 area. Okay, which so happens to be this support area here on the 1 hour chart. So you can start planning from there. Okay, but you need to know what's your reference chart. Okay, whether it's a trend consolidation. And the third question, remember the third question? Whether it's a volatile or non-volatile phase. So if you're talking about the daily chart, or let's look at the 4-hour chart, right? To me, it's a volatile phase. So that means that the market is no more doing this. You see this this whole swing here is actually non-volatile because the market just kept going higher and higher and higher with not much correction. But right now, it's sort of like consolidation a bit. So I'll consider this more of a volatile phase, and therefore I'll wait for a pullback to enter to upside. Okay, so S&P 2-level support, look out for 2409 and around 2406, 2407 area before the market might try to make a push up further. All right, this is S&P for you. Still looking rather bullish. Yep. But during the 1% drop, a lot of my friends shorted and died. Yeah, John, it's true, and it's not the first time, no. How many times you see that the S&P has a 1% drop overnight, only for the market to swing it back up? If I zoom out a bit, right? Look at this, so-called almost 1% drop. The thing just U-turn up. Where else were we? Many times. This was this was a Donald Trump incident. But many times, right, the market dropped only for the push up further. And if you look, right, if you look at this chart, right, even if you say that the drop, even if you took a short, okay, so let's say the market dropped like that. Okay, maybe you had a good analysis and you short at resistance somewhere. Where's the resistance? Okay, let's say here. Okay, there's a resistance here, right? So let's say that the market, price action, it make a lower low, a significant lower low, pull back to some point of resistance, you took a short, stop loss above here. Decent is a decent short. Okay, but if you're still holding on to the short, okay, and you're unwilling to take the loss, and you're still holding on to it till now, then you need to ask yourself, what's your strategy? Okay, and most probably you're not handling your psychology properly, because there's no reason why, after the market makes such an abrupt turn, and the whole 1% drop has been reversed, that you should still be holding on to this particular short. It just doesn't make trading sense. Alright, again, we're traders, we're not investors. Alright, anyway, you're short. Most investors are just buying and keeping. Okay, so this happens many times over the past few years. Really. Especially the Brexit and the Donald Trump event, whereby the markets drop only for it to U-turn. Alright, and caught many people by surprise. And it's not surprising, because most people can't handle their psychology when it comes to trading. Okay, it's one thing to listen to somebody tell you to put stop loss, to manage your risk, blah 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 blah. Alright, and we all heard that gazillion times. We attended a seminar, we attended a webinar, we read a book. You know, there's a lot of things that are telling us this, but knowing is one thing, doing is another thing. Okay, that's why I say trading is a lot of psychology. And if you find yourself knowing what to do but doing otherwise, then you need to question your own psychology. Then what is happening inside your unconscious head that you're not aware of, that you're always repeating the same mistakes that you tell yourself not to do? Okay, and this is pure psychology already. Okay, it's nothing to do with your strategy. It's your unconscious mind. I actually did a little presentation for the Premium Clients Workshop last week, and my topic was trading in your comfort zone, whereby I talk about your self-image and how it affects your trading. I'll probably cover it a bit more detail in the next webinar, but it's a very interesting concept, you know. But basically, you'll be surprised. Your self-image or your comfort zone sometimes can be detriment to your trading. Okay, because your comfort zone is defined by your habits. And for example, if you have really bad trading habits, right? For example, you don't take your losses, you don't have stop loss, you know, you over leverage and things like that. The more you do that, the more that behavior will be imprinted on your self-image, and basically that forms your comfort zone. So every time when you notice that you have a winning streak or you have a series of good trades, somehow or rather one single losing trade will wipe out all your profitable trades, because it goes back to the comfort zone of your bad habits. Okay, and it is very, very interesting how your subconscious or unconscious mind work. Is really, really very interesting. Okay, so let me move on. Sorry, today I digress a lot, yeah. So there's S&P for you. Meg is asking, do you think it's good to short S&P now? If you look at the 1 hour chart, first thing, Meg, you need to ask yourself, what's your reference chart? Okay, second thing, is too close to this support level for me to take any shots anymore. Okay, it's too close. Okay, anywhere between here to me is support. Therefore, if you ask me in terms of shorting, nah, not a good level. Okay, it's all about probability, right? And if you are planning to short near support, low probability, there's not much meat left. And if you short here, where's your stop loss? If your stop loss is above this swing, there's really no meat at all. Okay, so just, and don't forget, if you look at this area, there's a lot of support around here coming up. Yep. Unless you tell me that you want to take a really short-term sell trade. Okay, let's say if you break this support, okay, and you want to take it down all the way to the next level of support. Yeah, it's still a bit tight, I would say. Yeah, but I'm not a cup. I'm not a fan of taking a short now. Okay, I prefer to let it see how it reacts on these two support levels and try to trade it on the upside again. All right. Okay, are you okay, Mac? Yeah, Leonard, exactly. I mean, stop loss is just something that is very important. And if you guys, I mean, you guys are aware of guaranteed stops, right? Okay, please make full use of guaranteed stops. I know guaranteed stops, sometimes the minimum distance can be a bit wide, but number one, guaranteed stops really protects you in the event of black swan events like like flash crash or any big event. Okay, there's no slippage. Even in gapping markets, right, we'll still honor the stop loss. That's number one. Number two, guaranteed stops actually reduces your margin. So if you notice when you place a trade and you place a non-guaranteed stops, the margin is normally about 2% for FX, right? But if you place a guaranteed stop, all right, if you notice your margin actually is only the stop loss distance plus about 10% or so. Okay, so it greatly reduces the margin as well. Okay, so for those of you who have not explored guaranteed stops, go ahead and give it a go. Very useful tool. All right, so the S&P. Now let me move on to the DAX right now. All right, the DAX is a bit less bullish than S&P. The reason why I said that is because, let me see, yeah, it's still on the uptrend, don't get me wrong. Okay, support level is around the 12480 level. Okay, but daily chart is a bit more consolidating already. Okay, the support is 12480, resistance is around the 12850. Okay, if you go down to 4-hour chart, you can see it's more consolidating. Right now, I wouldn't do anything to the DAX because I don't like the levels. The levels that I'm keen to trade from are around here or around here. Anything between here, not particularly keen. Okay, because it's just consolidation mode. If you look at the lower the time frame you go, the messier it gets. Okay, the messier it gets. And to me, I like to trade clean levels. If not, I won't touch it because there's so many other instruments to look out for. Okay, but if it comes back to 12500 or 12550 or so, all right, happy to explore or happy to look for long positions back to the upside because this level here is quite decent support. You get resistance here, support here, potential support. In fact, when it came down here last week, I was hoping that it comes back to the 12500, but it didn't. It didn't come down to my level, and it went up from there. All right, so I'm just a bit more patient on the DAX and let it pan itself up before I'll jump in. Okay, so that's for the DAX. Let's go to the Hang Seng. All right, Hang Seng looking very bullish. All right, just be a bit mindful if you are planning to take any more long positions. Keep it short term. And the reason why I said that is because so daily is bullish, 4 hours is bullish, 1 hour is a bit more consolidation. Okay, these are all looking like if you look at the daily chart, right? The interesting thing I know is that there's a lot of bearish divergence on most of the chart. If you look at the daily chart, higher high on the price, lower high on MACD, 4-hour chart, higher high or a bit of a double top on the 4-hour chart on the price, lower high in the MACD, another bearish divergence. 1-hour chart is fine. Okay, so there's a bit of bearish divergence on multiple time frames, so just be a bit careful. If you want an aggressive setup, the Hang Seng, okay, you can take this as a double top scenario. And the next level of support that it might come down to is around the 25570 level. Okay, which means if you look at the 1-hour chart, okay, I'm going to draw a line across here. If we break this support level tomorrow, there is a probability that we might come to a support level of around 2557 or so. Okay, because now it's looking like one big fat consolidation. Okay, so that's the Hang Seng for you. Still bullish on the high term time frame, but shorter term time frame is a bit more consolidating, and I'm not surprised if we make consolidation back all the way down to 25560 also. All right, that is the Hang Seng. Let's see. You guys know that we launched the Singapore index, right? Let me just have a look what's happening there. I've not analyzed this chart yet. Do I even have it on here? Oops, sorry. I don't have it on this platform. Sorry about that. But yeah, we actually launched the Singapore index a month ago. So if you guys want to trade something that tracks the STI, just search for Singapore index on your platform.